Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Forex quick look. We're going to take a look at the dollar versus Canada. Today's date is September 18, 2024. Let's get started. It seems to me like that the Bank of Canada and the Federal Reserve is on the same path. We saw yesterday that CPI in Canada came in weaker than expectations, and that should lead the Bank of Canada to continue to cut rates. Now, they've already cut by 50 basis points, so they're ahead of the Fed. Today, the Fed meets, and they're expected to either cut by 50 basis points or 25 basis points. But the expectations are that if they do 25 basis points, we're going to see 25 now. We're going to see 25 in November, 25 in December. It's going to be a series of cuts to get the rate down between now and the end of the year. For the Bank of Canada, they're having even lower inflation and higher unemployment. The unemployment rate went to 6.6% last month, which is the highest level going back to 2017. If you take out the 2020 to 2021 COVID spike higher. So there is kind of a same as far as rates go, with perhaps Canada being in more of a weaker position. And with that said, the technicals are for the last week or so moving more to the sideways. We see a high price up here near the 136.22 level, and we see low prices all around here, around the 135.64 level. I can put a box around this area right through here, and it's a fairly narrow trading range with the price moving higher and lower, higher and lower, higher and lower. The last floor is pretty solid down here at 135.64. The ceiling up here is pretty solid as well, and it even goes back to this area right through here where the whole thing was started with different highs forming the ceiling before moving to the downside. So we returned to that area through here, found willing sellers as close as yesterday, and now we also even have the 200 bar moving average on the 4-hour chart in that area. Just above that is a 38.2% retracement of the move down from the August high to the August low. So if the Canadian dollar is going to get weaker versus the U.S. dollar, what do we have to do? Stay above the 200-hour moving average, and we pretty much did a good job on the dip here today. Stay above the 200-day moving average. That's this other green line right here, and the 100-hour moving average, and start to move and get outside of this box, and then get above the 38.2% retracement. From there, we can start to work at that 100-day moving average up here at 1.36691. What would hurt the bullish bias for the dollar versus Canada and would be a break outside of the low here at 135.64. If you get below that level and then below the 100-bar moving average on the 4-hour chart, then the buyers of the dollar Canada are scratching their head, and the bias shifts more to the downside and looking down toward our low prices that we saw through here and low price that we saw in the month of August, all the way down to 134.39. So so far the buyers are trying to keep the bias more to the upside, but there's still work to do in this dollar Canada if it's going to break to the upside. I hope these levels that I outlined in this video help clear that roadmap for you, give you a better view of what the road looks ahead if the dollar Canada is going to go more to the upside. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.